All right, so today we're going to be taking a deep dive into the world of real estate ETFs.
Okay.
Specifically, we're looking at this Motley Fool article
Right.
that is making a case for a Vanguard ETF as a potentially good investment coming up in 2025.
Okay.
And whether you're already an ETF kind of person or you're just kind of getting started, figuring out, like, what are my options? What am I looking at? I think you're going to find this really interesting.
It's going to be a fun one.
So the whole thing basically hinges on this prediction from J.P. Morgan Chase.
Yeah. So they're predicting interest rates to start dropping next year.
Okay.
And they even think there might be, quarterly cuts.
Right.
Yeah, that's their prediction.
Okay. So how does that tie in with this this ETF we're going to be looking at?
So that's where this ETF comes in, right? It's called the Vanguard Real Estate Index Fund, VNQ for short.
Okay.
And the author of this article, basically, their argument is that it could really benefit from this decrease in interest rate environment.
Okay.
And that's because it's made up of a bunch of REITs.
Okay. So can you remind us what REITs are?
Yeah, REITs are real estate investment trusts.
Right.
Basically,
It's companies that own and operate income-producing real estate.
Exactly.
Like office buildings and apartment complexes.
Yeah, shopping centers, all that kind of stuff.
Right.
And the way they generate income is from
Rents.
rental payments, yeah, but also from appreciation in the value of the properties themselves.
Right.
So, when interest rates go down, it becomes cheaper for them to borrow money, right?
Right.
Which reduces their operating costs.
Okay, yeah, so lower costs for the REITs, but how does that impact the folks who are actually, renting from the REITs?
Well, it could benefit them too, right?
Okay.
Because, if interest rates are lower, it could mean lower mortgage rates if they're homeowners.
Okay.
Or potentially, they could even see lower rents if the REITs pass on some of those savings.
Right.
And then, plus just in general, a lower interest rate environment tends to stimulate the whole housing market.
Okay.
So, it could potentially lead to higher property values, which is good for REITs and their investors.
So it's like a ripple effect.
Yeah.
Lower interest rates benefit REITs in a lot of different ways.
Multiple angles, yeah.
So let's zoom in on VNQ.
Okay.
Specifically. So
yeah, tell me what you want to know.
What kinds of REITs are like the main players in this ETF?
Sure. So VNQ's top holdings are REITs in retail, healthcare, and telecom.
So pretty good mix.
Yeah, you get a good mix of properties there.
Right.
So it gives you some nice diversification within the real estate market.
And the article mentions this current yield of 3.8%.
Right.
Which seems pretty attractive.
Yeah.
Especially compared to the S&P 500 average.
Yeah.
So can you kind of break down what yield means in this context?
So yield is basically the annual income that you get from an investment, which in this case would be dividends. Okay. Divided by the price that you paid for that investment.
Okay.
So, with VNQ's current price and dividend payout, investors are looking at a 3.8% return. Okay. Just from those dividends.
But then the article also mentions that the yield could go down if the ETF price goes up.
Exactly.
Even if the dividend stays the same.
Yeah. So, imagine you buy a slice of pie for $10.
Okay.
And that slice earns you $1 a year.
Okay.
So that's a 10% yield.
Okay, I'm with you.
But if the price of the pie goes up to $20, and you're still earning that same $1, your yield is now 5%.
Right, because the size of your investment has doubled.
Yeah, so the dividend hasn't changed, but
relative to your investment.
Exactly, it's a lower percentage.
So it's this kind of balancing act between the price and the yield.
Right.
And then since we're thinking V&Q might grow. As interest rates fall, that yield percentage could change over time.
It's a dynamic thing.
It makes you think, like, is there an optimal time to invest?
That's a great question, and a lot of investors struggle with that question.
Yeah.
But it's worth looking at, V&Q's past performance.
Yeah.
So over the last 5 years, the share price has grown about 6%.
Okay.
Not bad.
Not bad.
But then when you factor in those dividends, the total return jumps up to like 28%.
Okay, so way more than the S&P.
Yeah, so to put that in perspective, the S&P 500 only returned about 15%.
Over the same period?
Over that same period.
Wow. Okay, so it's really outperformed the broader market.
Yeah, when you factor in the dividend.
When you factor in the dividends, yeah.
Mm-hmm.
But hold on.
Yeah.
Haven't REITs been kind of struggling lately?
Yeah, that's true.
With inflation and rising interest rates?
Yeah, they've definitely faced some headwinds.
Does this article, address those concerns?
It does, yeah. It acknowledges that REITs haven't been, star performers recently.
Right.
But the author's argument is basically that we're on the verge of a shift.
Okay.
In conditions.
Right.
And as interest rates start to come down, they think that REITs could become much more attractive to investors.
So it's all about anticipating that potential turnaround.
Exactly.
And the article mentions that there hasn't been much hype around REITs lately.
Yeah.
Which kind of suggests
that's what they say.
There might be room for growth.
Yeah, it's like finding a hidden gem before everybody else catches on.
And speaking of hidden gems, one thing I noticed was the low expense ratio for VNQ.
Oh, yeah, that's a great point.
Only 0.13%.
Yeah, that's really low.
That's got to be...
that's definitely good news.
Good news for potential investors.
Absolutely.
Yeah, because it means less of your money is going towards fees.
Exactly.
And potentially it could generate higher returns.
That's the idea.
So we got this potential... positive economic environment on the horizon.
Right.
Interest rates predicted to fall.
Mm-hmm.
This solid ETF with a mix of REITs,
diversification,
attractive yield, and even potential for growth.
Potentially.
It's starting to sound pretty compelling.
It's definitely something to think about. Yeah. But before we get too carried away, I think it's important to consider some potential downsides too.
Right. So what are some of the things that we need to be aware of?
Yeah. What are the risks?
What should we be digging into further?
Exactly. That's where things get really interesting.
Okay.
Well, we talked about VNQ offering that diversification.
Right.
But you got to remember that it's still heavily weighted towards certain sectors.
Yeah.
Like retail, healthcare, and telecom.
Okay.
And each of those comes with its own risks.
Right. So beyond just the big picture, what are some of the finer details that we need to kind of pay attention to?
Right.
I mean, like you mentioned retail.
Yeah.
That sector's, gone through a lot of changes recently.
A lot of disruption.
With online shopping and everything.
A whole new world.
So how could that impact, how the retail REITs in VNQ do?
Yeah, it's a great question. And it's definitely something that, smart investors are thinking about. This shift to online shopping has definitely put pressure on those traditional brick and mortar retailers.
Right. But I mean, it's not as if retail is doomed.
No, exactly.
Some retail REITs have
they've adapted.
Adapted. They're doing fine.
Yeah, some are focusing on experiential shopping or incorporating technology or catering to specific niche markets.
Right. So it's more about understanding which retail REITs are going to do well.
Exactly.
Rather than just avoiding retail altogether.
Yeah, don't just throw the baby out with the bathwater.
Right. Right. And I guess that same principle applies to the other sectors, too.
Oh, absolutely.
Healthcare. I mean, they could be affected by changes in healthcare regulations.
Regulations, demographics.
Yeah, telecom,
yeah.
New technologies.
Yeah, all kinds of
changing consumer demands. It's like you said, peeling back the layers of the onion.
Yeah.
You got to go beyond the big picture.
It's all about the details.
And really understand the individual pieces that make up VNQ.
That's where the real insights are.
So how can people actually do that?
Yeah, that's the $1 million question.
Yeah, what are some practical steps?
Well, one of the best things you can do is just, stay informed about what's going on in the industry.
Okay.
Follow publications that cover the real estate market.
Right.
Read analyst reports.
Okay.
Pay attention to economic indicators. Mm-hmm. The more you know about what's shaping the real estate landscape, the better prepared you'll be.
So it's about doing your homework.
Yeah, do your homework.
Not just relying on one article or
don't just skim the surface.
Yeah, a quick glance at the numbers.
You got to go deeper.
And don't underestimate the power of talking to people, right?
Networking, conversations.
Yeah.
Absolutely.
People who are actually involved in the real estate industry.
They have the on-the-ground insights that you won't find in a report. It's such a local market.
Very local.
So, like, tapping into that.
Yeah, tap into that local knowledge.
Expertise can be really valuable.
It's gold.
And speaking of location, we mentioned earlier that VNQ is
U.S. focused.
Solely focused on the U.S.
Yeah.
So what are the implications of that for investors who are, maybe thinking globally?
It really depends on your investment strategy.
Right.
And how you view the global economy.
Okay.
If you think the U.S. market offers the best potential, then VNQ's focus on the U.S. is perfect.
Right.
But if you're looking for broader exposure, you might want to consider other ETFs or investments that target international real estate.
It's like building a puzzle.
Yeah, it's like a puzzle.
Finding the pieces that fit
exactly
your goals and your risk tolerance.
Your own personal puzzle.
And I think we should probably touch on taxes again.
Oh, yeah, taxes. Can't forget about those.
Especially with an ETF like VNQ.
Yeah, that's known for its dividend payout.
Those dividends, yeah.
They can be a little tricky from a tax perspective.
Right.
They're often taxed as ordinary income.
Okay.
Which can be at a higher rate than qualified dividends.
Right.
From regular stocks.
So it's not just about looking at that yield number.
Nope.
We got to understand,
you got to factor in
how those taxes could affect our returns.
Absolutely.
And that's where, talking to a financial advisor.
Yeah, get some professional advice.
Or a tax specialist can be really helpful.
They can help you navigate that maze of tax rules and regulations.
It's like having a guide.
Yeah, guide through the jungle.
So we've really dug into VNQ.
Oh, you've gone deep.
Talked about the benefits, the risks.
Well, the angles.
But I get the sense there's still more to uncover.
Oh, there's always more to learn.
Wouldn't you say?
That's what makes these deep dives so fun.
Yeah.
In the final part.
I want to kind of shift gears a bit and challenge us to think about the bigger implications of invested in VNQ beyond just the money.
I'm intrigued.
Let's do it.
Okay, so we're back for the final part of our VNQ deep dive.
The grand finale.
We've covered a lot.
We've gone deep.
Analyzed potential returns.
Yeah.
We've looked at the risks.
Dissected it up.
Even got into the nitty-gritty of REIT sectors and property types.
All the fun stuff. And
now I want to kind of take us in a slightly different direction.
Yeah.
The article that we've been talking about really focuses on, how much money you can make by investing in VNQ.
Right.
And obviously that's important.
Right.
But I think it's also important to think about the bigger picture.
Okay.
Real estate isn't just some abstract asset.
Right.
It's connected to, our communities, our homes.
Our lives.
Exactly. Yeah. So I see where you're going with this.
Yeah.
It's about recognizing that our investments can have ripple effects.
Ripple effects, yeah.
But how does that connect to VNQ?
Well, think about it.
Okay.
VNQ holds all these different REITs,
right.
Each one focused on different types of properties.
Yeah.
Some REITs might specialize in affordable housing.
Right.
Others might focus on luxury apartments or commercial real estate. Yeah. And how those different REITs can have real consequences for people, for communities.
So even though, we're talking about an investment.
Yeah.
These choices can actually influence things like access to affordable housing.
Affordable housing, development of different types of properties. Yeah. It's all connected.
If REITs that focus on affordable housing are struggling, it could make it even harder for people to find
a decent place to live.
A place to live.
Especially at a price they can afford.
Right. But if those REITs are doing well, they might be able to
expand, provide more options.
Right. It's a reminder that these decisions aren't happening in a vacuum.
No, they're connected to the real world.
Yeah, they have a real impact.
Real impact
on people's lives.
People's lives, absolutely.
So how can our listeners start to think about these social implications?
Well, I think a good place to start is to think about the types of properties that these REITs hold. Mm-hmm. Are they contributing to things like, affordable housing, sustainable development, revitalization of communities?
Okay.
Or are they just focused on,
Profit,
body.
Even if it means,
yeah,
displacing residents or
ignoring environmental concerns.
Right. These are really
something to think about.
Thought-provoking questions.
It's about looking beyond the numbers.
Yeah.
And considering the impact on the real world.
Right.
So another thing to consider is who benefits.
Oh.
If VNQ does well,
right.
Is it just the investors?
Yeah.
Or are those benefits shared with,
with the tenants, employees,
the community?
The community, yeah.
It's about the whole ecosystem.
The whole ecosystem
around these investments.
Yeah.
And finally, think about how your investment in VNQ might influence the future of the real estate market.
Okay.
Are you supporting practices that, promote sustainability,
right,
affordability, equitable access to housing?
Okay.
Or are you, maybe accidentally contributing to inequality or making social problems worse?
Wow, that's a lot to think about.
It's a lot, but it's important.
Yeah.
It's part of being a responsible investor. It's not just about the money.
It's about
making choices
right.
that align with your values and help build a better future.
Well said. So we've gone way beyond just, analyzing an investment opportunity.
Way beyond.
We've explored economic trends.
We've been everywhere.
Dug into real estate.
On yards.
Challenged ourselves to think about
think about the ethics.
The ethics of our decisions.
Exactly.
Right.
So hopefully this has given our listeners the knowledge and perspectives they need to make.
To make good choices.
Good choices, informed choices.
Impactful
choices.
That's a great takeaway.
That's what we aim for.
Thanks for joining me.
Always a pleasure.
On this deep dive.
Until next time.
Keep exploring, keep learning, and keep investing with intention.
Couldn't have said it better myself.